Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. It is another week to talk about all the goings on in fintech. Tom, Francis, how are you guys doing this week? What's been happening?
It's been a fun week this week. It's good to be back as always. But yeah, it's been quite a busy week, news week. We've had some big stories about AI, crypto. We had the autumn statement come out this week as well. So there's been quite a few big stories to work on, as well as the usual kind of fintech development. So it's been quite a fun week to reach out to some industry experts and yeah, it's good to have some big developments.
Yeah, absolutely. Francis, how about you? How's your week gone?
Can't lie, I think Tom said it really well. It's just been there's been a lot of news this week. Sometimes when we do the podcast, it just feels like it's gone really slowly. But this week has gone, it feels like it's gone quite fast. Although I will say, November has just disappeared. I don't know where it's gone. It felt like yesterday was Halloween. So, well, here we are.
Awesome. So what are you guys going to be talking about this week? Tom, what's your article?
This week I am trying to delve into your guys' creative side, and I'm going to be talking about the concept of the perfect payment.
Very good stuff. And Francis, how about you?
I'm going to be discussing the drop in due diligence from UK firms.
Amazing. And then my article this week is about the pension pot problem, especially looking at sort of the government's pension dashboard. But Tom, I'm going to let you go first because I feel like the perfect payment, that's a big story. So you go on ahead.
Well, big story or a lot of waffle, you're about to find out. But essentially, this month, the theme at the Fintech Times is Paytech. So we're spending all month looking at innovations, obviously in the payment space. And we've had a lot of interesting articles already with some fantastic insights from industry experts. But I really wanted to pick a specific article today, which was talking all about the so-called perfect payment. So essentially, I put a question out there to a number of experts, which was, could there ever be such a thing as a perfect payment system? And what might that look like? So I guess from my point of view, unfortunately, the consensus from most of the experts or all of the experts was no, there's not going to be ever such a thing as a perfect payment. And I thought Mike Smith, who is the director of Business Expert, summed up very well. He said that the concept of a perfect payment may vary among individuals and businesses, but generally entails instant, fee-free, secure, and universally accepted transactions. He said, while innovation in the payment sector continues to move towards this ideal, the diverse and evolving nature of global commerce suggests that there will always be room for improvement and adaptation to emerging needs and technologies. So, as I said, this was generally the consensus. We had different ways of explaining this, but essentially people telling me that whatever happens, all types of payments are going to have advantages and limitations. But there was a comment from Ramez Hanafi, who's the head of digital solutions at Visa, from another one of our Paytech articles this month, which is talking about the future digital payment innovations that we might see that really got me thinking. And he explained that Visa's work with tokenization has them envisioning in the not too distant future, Visa envision a driver asking their car to find the nearest cafe, order them a cappuccino, and then enable them to pay for that in their car using the biometrics on their steering wheel. And basically, he was talking about the concept of interconnectivity between different systems, in different places to pay, even in your car, at home. And I found that really interesting, talking about this sort of how seamless payments could be and quite exciting. And it still feels, to me, quite futuristic when you talk about things in that kind of way, but not necessarily impossible now with the technology we already have in place. So with that in mind, I really wanted to ask you guys about, obviously we've heard a lot in this article about different people saying it depends on your perspective, basically, what the perfect payment is. And that's why we'll never have one perfect payment that caters to everybody. But I want to ask you guys, what is, in your opinion, the perfect payment? What would help you everyday lives. As I said, I wanted you guys to get a bit creative and see what is your perfect payment. If you had to pick something or a method of paying that we maybe don't have at the moment, what would that be? And Polly, I can see you smiling, so I'll come to you first.
No, it's just because you said be creative, and I'm trying to now be creative because my answer was really boring. Because my the best way I've ever paid for anything is when I had a Google phone and using Google Pay, because the verification for that the Google phone I had, I think they still haven't had like a fingerprint scanner on the back, that button that like scans your fingerprint to like unlock it and stuff like that. And so it was just so convenient because it was on the back of your phone, so your finger was there already, so you just like dubbed your finger on the little scanner and then you paid. Apple Pay, in comparison, going from Google Pay to Apple Pay with my iPhone was terrible, because in Apple Pay you've got to do the Face ID, and I never remember to do it because I'm so used to doing the Google Pay finger scanning thingy, so I'm always there trying to pay and it's like desperately asking for my face and I just forget to do it. So I mean, again, that's incredibly boring, but I think when it comes to payments, there's always that fine line, isn't there, of being quick but also being secure. Because in like for different kinds of payments, especially like when thinking about like sort of bank transfers and payments in that way, there's a lot of ways I think that they could both, obviously we want like quicker and frictionless and seamless and that. Those are sort of the big buzzwords. But I think there is such a thing as being too quick and too frictionless, because there is one bank that I have that to make a bank transfer, like it just you press the OK button, then it goes, and I feel like for me that's just too quick. I need that second screen of like verification of like, are you sure you want to send this, and like to review it, because like you literally just like put your details in, put the person you're sending the money to, and then push the button and it's gone, and that's not enough for me. I think, what's a creative way we could have a payment? I don't know, man. Like, I feel like the car one's pretty fun. That's pretty cool. I know there was that Amazon grocery shopping one where you don't actually physically like do anything. You just like walk into the shop, grab the things you want, and then walk out of the shop again, and you get charged. I know that's pretty cool. What else could we do? Maybe like, I don't know, glasses pay. Like, I don't know, I just look at a till and it like registers a chip in my glasses or something. That could be fun. If no one's done that yet, maybe now's the time to get on it. But
maybe time to patent that just before
yeah,
anyone else steals
there
it.
you go. So that's my creativity for the day. Glasses pay. So you can have that one for free.
I quite like that. I mean, for people who don't wear glasses, that seems
Tough.
a bit tough. I'm
You've
not
got,
sure I want to
if you
commit to
don't wear
glasses
glasses, your life
to
is better
pay.
in so many other ways. You
That's
can let
fair,
us
that's
have
fair.
this.
I quite like like you said, I really like the concept of like the Amazon Fresh stores where you just
Yeah,
scan the
what they
QR
have
code
in
when you
Fresh.
go in, and once you scan it, it's like, okay, we're going to register everything you pick up on the way in. I think that's still a bit mind blowing to me. I've never tried it actually, but I feel like I'd be nervous about the fact it's so seamless. Like, is it going to register everything I pick up and put down? It's going to charge me things. I mean, I'm pretty sure the consensus is that it doesn't do that. It's actually quite seamless, and it never charges you for things you haven't come out the store with. But yeah, I think I like that idea of, obviously we've always got this catch-22, like the more seamless it is, the more unsecure it seems almost. Like if it's so seamless and so real time, how many checks can be taking place to make sure that you're not sending your money to the wrong person or whatever. But I really do like the concept of just walking into places, taking what you want, and not needing to wait in a line and transact in any way. I think, in reality, the perfect payment for me would be just don't charge me. But I don't know if that's going to be successful.
That's so true. Just perfect payment is no payment.
No payment. They get rid of the payments. That's seamless, isn't it? That's my perfect payment for sure. I think I'm going to stick with that, to be honest. Francis, I'm excited for your whatever you're about to invent, because I feel like you're just going to create something outlandish.
I just want to, unfortunately the listeners won't be able to see it, but I've made a page of notes of what perfect payment is or isn't.
That's like a very detailed page of notes as well. That's not
I
even
came
like
prepared today.
That's a full page of tiny handwriting
He
notes.
wasn't messing around.
God.
Look, you said get creative with it, and that was all I needed to do. That's all I needed to hear, even. So the crux of my idea, right, is telepathic payments. That is the perfect payment because, right, the problem is when you've got regulations that are stopping you from, well, not stopping you, but basically ensuring you're safe. It's like you guys said, that's the catch-22. That's what's really holding you back. And I think that is that fine line of, well, I guess we're talking about being realistic here, because unfortunately I don't think telepathic payments are ever going to be a thing. But if we had to pay for stuff, I think that would be it. But yes, that fine line of trying to make stuff instant, but also making sure it's safe. And it's something that all the, or as you said earlier, Tom, that the majority of the experts were in the article mentioned as well. But I think realistically, I think when you, I say realistically as if this is a realistic possibility, but with my telepathic payments idea, right, what would happen is you just think, I want to send that money to someone, and something just goes, you sure? And you go, yep. So then you send the money off. But say, for example, you think, oh, I've sent, I don't know, say I sent you 10 quid when I meant to send you 5. I could then sort of activate something which would then bring that money back. I could make the adjustment, send back what was the right amount. And I think that's the problem, is that you're never going to be able to have that sort of, that level of like a safety net, or if you send the wrong amount of money without having to go through a million loopholes. I mean, it's if you get scammed, for example, in the modern day, you need to go through so many things to try and get your money back. And even then, sometimes the banks would just say it's your fault. I mean, luckily, I think they're starting to sort of move away from that. But I know that in some instances they go, well, that's kind of, user error. So I think when you think about it in that way, the perfect payment is having something which you're 100% secure of, and something that's instant. And those two things are just impossible, because I don't think you're ever going to be able to sort of say, because all it takes is a misslip, right? If you accidentally add an extra zero or something like that, and then there's the complete wrong value of whatever you're doing, and it's all gone wrong. But that's what I'm saying with my telepathic payments idea. You just mentally think, oh, I wish there wasn't that extra zero. Don't worry, it's got you covered. But yeah, again, unfortunately, I don't think that's very realistic. And, you need regulations to sort of keep everything safe and secure and above board. Because, in the wrong hands, I'd hate to think what somebody could do with my telepathic payments idea. I mean, it's a risky business. But yeah, I think all in all, it's a great idea. Unfortunately, I don't think it's possible. If there's any inventors out there who think they can make it happen, Francis Bignor on LinkedIn. But no, I think it's interesting to talk about the perfect payment, and unfortunately, I do agree that it just won't ever happen.
I'm sad we don't have more time to just discuss your opinion of what might happen if telepathic payments get into the wrong hands and using that as a force for evil.
Telepathic payments specifically, not just like telepathicness in general, but like payments.
Yeah, obviously, that's the most important thing, right?
Well, let's move on. Francis, do you want to go next, or shall I go next?
Yeah, cheers, Polly. So I think I'll go next. Yeah, it's kind of a crash back down to reality now. I think going from talking about sort of what the perfect payment might be is quite a fun topic, but then when you're talking about actual sort of due diligence and compliance, and that was the main theme of the article that I wanted to bring to the table today, which came from Smart Search, and it was about how companies were screening processes for their new customers, and the report found that in 2022, 73% of regulated businesses were doing their due diligence against sanctions or politically exposed persons, or PEPs, their PEP lists, I should say, while in 2023, only 25% of the businesses were, which is a crazy drop-off, really. It's almost 50%, a 50% drop of companies really taking the time to make sure that their new customers are all above board and are all, good actors, essentially. So yeah, there was a few things from the article which I thought were really, really cool, which was that it broke it down by the compliance by each sector, and Smart Search found that the legal sector, which previously led with a robust 4/5 commitment to always performing checks, it plummeted to a mere quarter in 2023. The financial services sector also declined from almost 2/3 to just over a fifth. and estate agents demonstrated a similar downturn from 37% to roughly 24%. And yeah, I just thought it was really interesting to see why there was such a big decline. And I think what was most interesting about this was the timing of it, really, because it was only in September that the Financial Conduct Authority, the FCA, announced its new measures to ensure PEP due diligence. And it was when it was announcing that a new review was going to be taking place that would go through all the way till June 2024. And over the course of the year, the FCA would be investigating how organizations are applying the definition of politically exposed persons to individuals, how they're conducting proportionate risk assessments of UK PEPs, their family members, and known close associates, applying enhanced due diligence and ongoing monitoring proportionately and in line with risk, deciding to reject or close accounts for PEPs and their family members and associates, effectively communicating with their PEP customers, and keeping their PEP controls under review to ensure they remain appropriate. So, with all that in mind, I think it's really shocking to see that, especially when organizations know there's going to be a spotlight on due diligence for new customers. I think it's almost bizarre, really, that it's at this time that that we see that there is this such a big decline. So, I mean, I feel like the FCA's review, is going to light a fire under these firms. But I wanted to get your guys' views, and if you agreed or if you thought that, how impactful the FCA's review is really going to be. Tom, I'll go to you first.
Yeah, I think surely it can only have a positive effect when the number slips so much to only 25% doing this due diligence. I think it's important that the review came in fairly quickly, I guess, after the stats from 2022. So earlier this year, they've said, right, we're going to try and take control of this a bit more and introduce these measures. I think depending on how these measures have an effect or how they have had an effect, I guess we don't have the stats for that at the moment, regarding this sort of due diligence. It'll be interesting to see if the measures actually do enough. I wonder if maybe the FCA needs to rule with even more of an iron fist, if that makes sense, and be more strict on firms beyond the existing measures. Because I think otherwise, I mean, obviously currently so few firms are doing as they should when it comes to compliance, that maybe there needs to be more strict rules and warnings and punishments in place to really send a message out there to these firms to say this isn't acceptable anymore and needs to change. So hopefully the new measures can have an impact on that, but I wonder if they're going to be even more, they need to introduce more significant measures in order to see the results that they're really looking for. So I think it'll be an interesting next 6 months to a year to see whether they actually apply as they were hoping them to.
Yeah, I think one of the more interesting things about the review really is the fact that as they're going and examining these firms, they're going to be cracking down, the FCA that is, they're going to be cracking down on them and sort of really enforcing these rules. But I think you are right. It's a thing of, it's not really stopping it before the problem's already begun. Because I mean, all it takes is once the bad actor's in, then they can start making, start abusing the ability or the account, really. And at that point, it's already sort of, now I'm not going to say a lost cause, because obviously you want to sort of nip that in the bud as soon as possible. But no, I do definitely think that you're right. And it's a thing of stopping it from happening before, trying to, or that's not the right way of saying it. It's like preventing it from happening rather than stopping it once it's already started. So yeah, I think that's a very, very valid point. Polly, what are your thoughts?
Yeah, I don't really have too much to add from what you guys have already said, because I think you've both summed it up really nicely. I think what I will say is that when it comes to the FCA and sort of the rules and the regulations that are in place, the last thing that you want to be doing is not complying, right? Like complacency on compliance, which is a mouthful. That it's just almost ridiculous and a bit silly, because you're just risking so much by not ensuring that your compliance is in place. And I think to have such a drop in the number of firms actually upholding the procedures for PEP listed customers, or for new customers in general, that's such a significant drop. And you wonder why that is occurring. And I think, with sanctions coming into place possibly, and all this different activities happening, the last thing you want to be doing is not keeping up with your compliance, because that's when you're going to get slapped with these massive fines. And I'm sure for like some places, some banks, a big fine is nothing. You know, we've heard before about banks getting fined a ridiculously high amount, but when it comes to maybe the smaller companies, having a massive fine of like £1 million, that's something that you're not really going to recover from. So I think, you know, it's really not great. And I think with this new review from the FCA, I think it's clear that there's going to be a crackdown on it, and I think it's clear that there's going to be, you know, the massive, you know, look into it, and possibly there's going to be some fines handed out. So I think if you are a company who isn't keeping up with your due diligence, then I think now is the time to start getting on it, because it's not going to be good if you're caught not doing it. Like with anything, it's great if you're not caught, but if you are caught, then that's when you start going to have the problem. So I think it's going to be a careful line to tread, and with these sort of obligations, as well as sort of any other like compliance issues that are going on at the moment. But remaining compliant has got to be the key priority for everyone, surely.
Absolutely. And I think one of the interesting things about the review really is that it says even those who find themselves or who aren't being compliant really, even if they're not aware of it, they're still going to be suffering just as much as somebody who is aware. So I think it really does sort of crack down on, even if you think it's all right, even if you think your compliance systems and processes are enough, I think it's just a wake-up call to double check and make sure that everything that can be done is being done. And I think that is going to be one of the big things from the FCA. And I think the FCA has done a great job this year of really bringing to light new regulations. I mean, consumer duty is one of the best things that I think could have really happened. And I think this is just another step in sort of protecting consumers, which is great, really. But yeah, no, I think it'll be, like Tom mentioned, it'll be interesting to see what happens over the next 6 months to a year. And with that, I think we'll go on to your article, Polly.
Awesome. Thank you, Francis. So yeah, basically my article is looking at pensions. So I know we talked about pensions a few weeks ago now. I can't remember. The podcast time is different to regular time. But there has been some research from Moneyhub that has found that commercial dashboards could be the solution to the 26.6 billion lost pension pot problem. So 1 in 8 pension savers don't think it's worth their time and effort to combine their pensions, and a further 14% preferring to actively leave their pension pots separate. So this is research from Moneyhub. And has basically this attitude of keeping your pots separate intentionally, both whether you think it's because it'd be better if they're kept separate or because you just can't be bothered or don't know how to combine them. This runs the risk of savers potentially leaving their retirement savings in poor yielding investments or forgetting a number of their pension pots altogether. And I know we talked briefly about this on a previous episode about in terms of like people not knowing what to do with their pension pot. And I think this is definitely one of the areas where there's like a gap in the knowledge in terms of combining pension pots together, because it's something that I didn't know you could do until sort of, you know, the last few years when I started working at the Fintech Times, and then I was learning all this stuff about pensions. I didn't realize that you could combine your pension pots together. Like I had various different pension pots from like various different jobs, and they were just like left in the ether, and I didn't really do anything with them. So I can definitely see where that would kind of overlap with the sort of pension knowledge issue that we've talked about previously. And researchers also highlighted that around 88% of individuals with workplace pensions have at least one pension that remains unclaimed, with an estimated £26.6 billion of lost pension pots in total, which is literally a ridiculous amount of money. I think especially when you consider sort of the cost of living crisis at the moment, and just generally, I think, retirement is a time when you kind of want to be doing all the things that you maybe couldn't get to do for whatever reason during your working life. And so to think that there's £26.6 billion of money there that's just floating around in the ether, it's quite shocking. So I think this, obviously, I don't think you can talk about this idea of combining pensions without, of course, talking about the government's pensions dashboard, which has promised will help people track down their lost pensions and sort of keep track of everything. Won't necessarily encourage or offer consolidation as a next step, but there are a lot of other sort of pension providers and other sort of fintechs out there that do offer that. So I think it's interesting because obviously the pensions dashboard has been delayed and delayed and delayed and delayed. I don't even know what the next when it's been promised since. I just know that it's been delayed and it's always on the horizon. I would think the second half of 2026, I think, is sort of its prediction, but that's still a very long time away realistically. But of course there are other different dashboards and fintech companies that offer these dashboards already. So I guess my question to you is, how important do you guys think this, the government's pension dashboard is going to be? Do you think it's going to be the Hail Mary solution that a lot of people are saying it is, or has it got to the point where now it's just been so delayed that other things have cropped up in their stead? Like Moneyhub, I believe they have their own dashboard. There's loads of other like pension bee place, like loads of other fintechs offer a place to consolidate your pensions. And also, do you think the whole consolidating pension things is, something that people should be doing? Is this something that we need to start shouting about a little bit more in terms of getting things all together, all in one place? Or is it better, or not necessarily better, but do you think it matters if people just kind of leave them as long as they know where they are and keep track of them? Francis, I'm going to go to you first.
I think it's really interesting that you've brought up the pensions dashboard because, ironically, it almost feels like it's the perfect solution, and I think that's quite a funny following from Tom's article where we're sort of discussing what our perfect, payment is. I think if you're thinking about what is the perfect way to monitor your pensions, I feel like the pensions dashboard, in theory, is technically what many people would say. And so in that regard, I think it will be really, really impactful. And I think another way in which it will be impactful when it arrives, eventually, whenever that is, will be that I think a lot of people are a bit hesitant to turn to fintechs purely because of the fact they don't understand how fintechs work. Not everyone is, and I'm not saying a certain demographic is, because I don't know how many times we've highlighted that it's not the older generation that are necessarily switched off with digital adoption by any stretch. But there are undoubtedly, in every sort of generation demographic that you look at, some people that would be a bit more hesitant to adopting a fintech, which they haven't heard of. They're a little bit cautious. They think, I don't really want to trust a company that isn't one of the big names. But once the government sort of announces something, I think or at least most people would see that as a trustworthy source. And I just get the impression that a lot of people would sort of see a lot of, I don't want to just keep saying trust, but I think that is ultimately what it comes down to. Or maybe it's just a thing of like ease of access. I think if a lot of people see that it's from the government, they'll think, it's just like everything else. It might be easier to get a hold of. I don't need to make an account. I then don't need to link everything. I mean, the reality of it is you probably do, but I think there was probably going to be some weird misconceptions that will lead to a higher adoption use of the government's dashboard as opposed to fintechs.
Yeah, absolutely. I completely agree with you on that front. I think there's a lot of, not necessarily mistrust, but like wariness when it comes to new things, especially when we're thinking about money and financial products. You don't want to fall into the trap of giving your money to someone and then them running off with it or them going back, whatever. It's not secure. So like I know there's a lot of sort of wariness around fintech, and because it's so new and so different to everything else, and because you haven't necessarily heard of them before. I know I'm guilty of that. If there's a company that I haven't heard of, then I'm probably not going to do like whatever it is I want to do with them, whether it's like buy insurance or anything like that. Like I always go off what I've heard of, which isn't necessarily going to be the best companies, but it's just the ones that I'm familiar with. So I think that's really interesting you bringing up that point. I think you're absolutely right in that the pensions dashboard from the government will solve a lot of problems, and it's really kind of the ultimate solution, I think. And I think what is interesting about the dashboard as well is, as far as I'm aware, it's not about consolidating pensions. So I know a lot of the other dashboards and like pension companies do, where they like put all your pensions in one pot together, whereas I believe in the pensions dashboard it's more just like looking at what you've got and being able to keep them like that. So I think that's an interesting move as well. And just generally, I think allowing people to see all the information in one place, I think, yeah, it's going to be great if it ever happens. But Tom, what do you think about pensions?
I think when I think about the government pension dashboard, my mum is like the target audience. She has had so many jobs. I think I read that the average like person throughout a lifetime has 11 different jobs, so therefore like 11 different pension pots. And my mum has far exceeded 11 jobs in her lifetime so far, and she has so many pensions. And I remember she's had so much trouble trying to combine her pensions, and obviously you can't do it all in one go. The way she was doing it, she doesn't trust. She's that kind of person. She's not going to trust like a Moneyhub or a Pension Bee because she's never heard of them before. She doesn't know who they are, like if they're trustworthy. Even if she sees like trustworthy reviews, she won't just put all her pensions or try and combine all her pensions there. So I think the government dashboard is kind of what that's aimed at, is people will trust something that comes from the government and a government solution. But I think the fact that the pension dashboard won't enable or won't have a feature that enables consolidation of all your pensions obviously it's very handy, but it actually doesn't offer the next step that I think a lot of people, like my mum, would be looking for, is, oh, I've got all the information, but now I still don't have anywhere to use that information and combine them. So one thing I think the autumn statement, they kind of potentially explored the concept of like a pension, what was it called? A pension for life or a pot for life, something like that. One pension pot for life, which is basically you get assigned one pot, and then wherever you're employed, you bring that pot with you and they pay into that rather than you getting several different pots. So that's not something that we're going to see for a long time. But if it did come to fruition, I think that would be very handy for people that move more so than a pensions dashboard. So I think obviously it's a space that maybe has seen less innovation than it's needed for the last like 20 years. And we're now entering a point where hopefully we're going to see more innovation in that to make pensions a lot easier, because at the moment it's so difficult to, one, view the information, and then two, combine your pots if you want to do that. So yeah, there's a long way to go, but we're slowly but surely making the right progress towards that.
Yeah, absolutely. I completely agree. And I hadn't heard about the pension pot for life, and I think that's brilliant. Why haven't we done that yet? Because I think that would also solve every single problem ever and make everything so much easier. So that sounds great. But anyway, that does bring us to the end of our discussion this week. Thank you so much, guys, for bringing your articles and having some good old chat about fintech. If you want to hear any more from what we've talked about today, head on over to thefintechtimes.com, where we've got plenty of news and insights over there. Very quickly, let's move on to what I learned this week. So each week we are learning something new all the time at the Fintech Times, because so much new information, news and insights crosses our desks. So we thought it would be fun to share that with our listeners. So Francis, what have you learned this week?
In the light of sort of financial education, I suppose, the Fintech Wales, a non-profit independent membership organisation for the fintech and financial service industries in Wales, has partnered with the London Institute of Banking and Finance to offer an exclusive 5-module course for professionals in fintech to deepen their understanding of sustainability strategies. And, like I said, sort of financial education, link that with sustainability. It's a recipe for success. So yeah, I thought it was really cool.
Awesome. And Tom, what have you learned this week?
This week, I learnt that Alika Bank took the crown as the UK's fastest growing fintech in history, which was previously held by the fellow challenger bank Revolut, according to Deloitte's UK Technology Fast 50 Awards. So we've got a new big fintech contender entering the space and growing in the space.
Awesome stuff. And what I learned this week is that in the build-up to the Chancellor delivering his autumn statement, small business lender Iwaka, is that how you say it, found that the top priority for SMEs is tax cuts for small businesses. And I don't think that's a big surprise, but obviously very topical with the autumn statement. And I guess we'll see how it goes on the economy front for all that. But anyway, guys, thank you so much for joining me this week once again on the podcast. It has been a pleasure to talk about fintech with you, as always. So I will catch you on the next one.
See you guys next week.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.